minimum, and the 75% maximum in common stocks. We allow this range to those investors who have strong convictions about either the danger or the attractiveness of the general market level. Some 20 years ago, it was possible to discuss in great detail a number of clear-cut formulas for varying the percentage held in common stocks, with confidence that these plans had practical utility. And like the times seem to have passed such approaches by, and there would be little point in trying to determine new levels for buying and selling out of the market patterns since 1949. That is too short a period to furnish any reliable guide to the future. Growth stock approach. Every investor would like to select the stocks of companies that will do better than the average over a period of years. A growth stock may be defined as one that has done this in the past and is expected to do so in the future. Thus, it seems only logical that the intelligent investor should concentrate upon the selection of growth stocks. Actually, the matter is more complicated, as we shall try to show. It is a mere statistical chore to identify companies that have outperformed the averages in the past. The investor can obtain a list of 50 or 100 such enterprises from his broker. Why then should he not merely pick out the 15 or 20 most likely looking issues of this group? And lo, he has a guaranteed successful stock portfolio.